Welcome. My name is Carlton Dennis, Senior Tax Advisor at Carla Dennis & Associates, and this video is on the 5 steps to choosing the right business entity. Here's what we're going to go over today. We're going to understand the 3 types of business entities and which would give you the most bodyguard coverage to protect yourself. We're going to discuss how you can choose the right business entity from the start to avoid tax and other consequences. And I'm going to help you guys pick the best entity structure to avoid writing a big check to Uncle Sam at the end of the year. Now, why is all of this important? Well, number one, it's important to protect you from an avoidable tax bill. If we know that with additional information that we can avoid a tax bill, we need to take advantage of that. Number two, it's important to prevent you guys from overpaying on your taxes. I want to make sure that all of my clients are informed about the various business entity types so that they can avoid a huge tax bill. And most importantly, it's important that you make the right decision from the start. I do not want you to start the race with the wrong tennis shoes on and have to go back to the start to put the correct tennis shoes on. Let's get it right from the start. So let's jump into the 4 things we look at when choosing the correct business entity type. Number one, I need to know what entity type that you're interested in setting up. This is so important. Depending on the type of profession you're going into could determine whether or not we choose one entity over the other. So I would like to know what your profession is and what type of entity type that you're interested in. Next thing that we're going to want to look at is the taxation for the various types of entities. LLCs, C corporations, and S corporations are taxed differently. So I want to make sure that we are educated on how each entity is taxed before we decide to pull the trigger on which one we want to set up. Number 3, what's very important is I need to understand what your personal tax liability is before we set up the entity. I got to know how much you owe versus how much you're receiving back in a refund and what your taxable income is before we decide to set up the entity. And number 4, and most importantly, I need to make sure that my clients understand the advantages and the disadvantages to each entity type so that way we can make an informed decision. All right, so the first entity type we're going to go over is the sole proprietorship. Now, the sole proprietorship is a business entity that is consisting of one person. Now, when you have a sole proprietorship, your income and your expenses flow through on a Schedule C form, which means if you're filling out a tax return, there will be an extra form inside of your tax return. That's called a Schedule C. This is where all the income and all the expenses are reported. Now, with the sole proprietor, the individual who owns the business is liable for all debts in action conducted by that business. That could be one of the biggest disadvantages to having a sole proprietor business. If anything happens, the individual is liable. Now, one of the bigger advantages to setting up a sole proprietor is that they're very easy to set up. We see individuals setting up sole proprietorships every day. They're very easy to set up. There's very minimum legal restrictions. However, you can't bring in owners and you cannot bring in outside capital. So there are some limitations. The next type of business entity that we're going to talk about is partnerships. Now, a partnership entity is an organization having 2 or more owners that function as a trade or business. The income and expenses from a partnership flow through to both partners equally. Income is taxed to the partners, not the partnership. The liability with a partnership lies with the partners. This can be another disadvantage to the partnership, similar to the sole proprietorship, as the liability goes to the shareholders of the partnership. Now, the advantages to a partnership, similar to a sole proprietorship, is they're extremely easy to create. If you have another friend or another partner who complements you very well, you can set up a partnership relatively easy. However, when you are growing a business and you get into some disagreements, due to the legality of a partnership and how it is set up in an informal way, you may have disagreements in making decisions that could help move the company forward. So take that into consideration when you are thinking about going into a partnership business. Do I want to be in business with a partner that's equally liable and that we will have an informal agreement on decisions? That is what is key. The next type of business entity that I want to talk to you guys about is C corporations. C corporations are something that you're probably more familiar hearing. Big companies and corporations such as Google, Apple, McDonald's, Sizzler, these are C corporations. And C corporations are business entities that carry their own legal status, meaning that the C corporation pays taxes on the profits. Shareholders, however, pull cash from the company, and they're usually taxed as dividends. Now, with the C corporation, one of the biggest advantages is the liability does not lie with the shareholders. The liability lies with the corporation, and all debts incurred lie with the corporation, not the individuals. So that's a huge advantage. Another big advantage to C corporations are you're able to raise capital inside of a C corporation, and C corporations are extremely easy to pass or transfer or even sell. That is one of the big reasons why clients set up C corporations. We tend to see a lot of clients sell C corporations. Now, one of the big disadvantages to C corporations is with improper tax planning, you could look at double taxation, and you could be subject to various state and federal restrictions that hold you back from being able to conduct business. The next type of corporation we're going to look at is an S corporation. It has the word corporation in there, so you might be thinking C Corp. Now, with an S corporation, you are starting out as a C corporation and electing to be taxed as an S corporation. What this means is you are electing to be a flow-through entity, and how you do that is by filing a form called the 2553 form. Now, with S corporations, the income and expenses flow through to the shareholders, and they're taxed very similar like a partnership. Shareholders are not liable for any debts incurred by the corporation, similar to a C Corp. The company holds the liability. One of the big advantages with an S corporation is you avoid the double taxation, and profits are passed. Profits passed are not subject to self-employment tax as in a partnership. I'm going to repeat that. Profits passed are not subject to self-employment tax as in a partnership. If you are unfamiliar with self-employment tax, I advise that you guys take a coaching call and we can go over self-employment tax. Now, one of the other advantages to being an S corporation is you can raise capital through stock. Not to mention, there is limited liability with S corporations. However, one of the big disadvantages with S corporations is that shareholders pay tax on the earnings if it's not distributed. That is right. Even if you aren't taking distributions, you are still paying tax on the earnings inside of the S corporation. Also, there is less flexibility in choosing the tax year when setting up that corporation as well. That's key to know, guys. Now, let's talk about the most common type of entity, an LLC. An LLC is a limited liability entity formed under state tax law. Similar to a partnership, it shares the exact same type of taxation. Now, you can choose to be a single member LLC or a multi-member LLC. That is completely up to you. However, if you choose to be a single member LLC, the tax return is going to be a personal tax return because single member LLCs have a Schedule C that flows through to the personal tax return. Now, some of the advantages with LLCs is the liability protection, especially if you're a real estate investor and you own properties. An LLC is the golden rule for when you have a property that you want to get ultimate liability protection on. I recommend setting up an LLC for your rental property if you're looking for maximum liability protection. Also, you can avoid certain S Corp restrictions as well as the double taxation that comes with C corporations. So there's huge advantages to being an LLC as well. Now, what are the disadvantages to being an LLC? Well, the disadvantages to being an LLC is there's inconsistent treatment from state to state. Each state treats LLCs differently. So I want to make sure that you guys are looking up your particular state's rules, laws, and regulations when forming this type of entity. Also, one of the disadvantages is there's no sharing of profits, and you must have at least 2 owners to be taxed as a partnership for federal tax purposes, or else you'll be treated as a single member of a LLC in which it flows through to your personal tax returns, okay? Now, if this interests you guys, I would love to continue the conversation. What I am offering to you guys is an advisor coaching call with me. What this will allow us to do is it allow us to find the opportunities to save you money on your taxes before year end. With such a big tax law change by the Trump administration, it is important that we are seeking out additional information and taking advantage of the new tax laws that are out there. I do not want to see any of my clients not capitalizing on all the new tax advantages that are out there. For example, the 20% flow-through deduction that you now can get and receive with the flow-through entity. If you're unfamiliar with this lingo or what a flow-through entity is, I ask that you please sign up for this coaching call. I want to make sure that I can solidify in your guys' heads exactly what those differences are between each entity type. What I'm also going to do during the coaching call is I'm going to review your past tax returns. I want to figure out how your tax liability got to where it is today when you walk into my office. Whether we are having an appointment over the phone, over Zoom video call, or you guys coming down to our office to have this appointment, I want to make sure that I review your past so that I understand how your tax liability got to where it is today when you have a conversation with me. That is so important. I want to make sure that anyone you work with at least understands how you got to where you are today. I believe that is vital when choosing someone that you're working with. Similar to your doctor wouldn't prescribe you medication without looking at what you're allergic to and your family history. That is the exact same approach that I want to take. What's most important is making sure that you guys aren't missing out on opportunity. If we aren't doing anything to educate ourselves or to leverage the tax codes, chances are we're missing out on opportunity. In today's age, it is unacceptable to leave money on the table because that is giving Uncle Sam a tip. If you're interested in giving Uncle Sam a tip, then this coaching call is not for you. However, if you are interested in seeking out the opportunity to leverage the tax codes to offset your income and lower your tax liability, I advise that you take advantage of this coaching call today. So what I want to do is offer you all a 30-minute coaching call. And what this call is for is a time for me to understand a little bit more about you as a taxpayer. It is so important in today's age that I understand what your goals and your vision are. So that way I am making sure that the strategies that I implement into your tax plan do not hinder your long-term vision. I want to establish a relationship with each and every taxpayer that comes through my door, has a Zoom video call appointment with me or a phone call appointment with me, and understand what makes them tick, understand what makes them happy, and understand exactly what retirement looks like for them so that I am engineering strategies that are intentional. Now, this coaching call we are going to offer to you guys, but it is rare that you will find a coaching call that is less than $500, and it's rare that you will find a coaching call like I'm offering that actually comes with a licensed tax strategist who you're speaking with. Since I'm an enrolled agent and we study tax law and tax code, we are able to perform taxation in all 50 states. I want to use my license to reach out to each and every one of you to assist you in your financial future. Now, to sign up for our coaching call, you can make a payment, 2 payments of $199 to go ahead and get this coaching call, or you could make 1 payment of $297 and save yourself $100. However, if you sign up today, I will be giving you this coaching call for $100. That is correct, $100, a coaching call with myself, 30 minutes, you and me, and us figuring out exactly what we need to do to be impactful before year end and game planning for the 2019 tax year. I want to also let you know that I will be giving you a bonus tax deduction secrets the IRS does not tell you about. Carla, our CEO, and myself have created this booklet over the last 2 years to formulate strategies that we feel are the most impactful for taxpayers. We created it into an easy, convenient booklet. And this information cannot be found on Google. This information cannot be just taught. This information is now delivered to you in a booklet format that you can read through, ask questions on, and apply this information directly into your own individual tax situations. I'm giving that booklet to you for free by signing up for my coaching session. I will also include in the coaching session as a free tidbit is my training booklet on the 24 wealth multipliers and the Trump tax plan. The tax codes were released last year in December, and I've spent the last 10 months developing a booklet like this to deliver information that I feel is the most important information to bridge the gap between the big players and the everyday taxpayer who wants to get on the level of the high net worth individuals. There isn't a secret to it, guys. It's a formula, and I have developed this formula into a booklet that I'm now giving to you for free when you sign up for my coaching call. So when you ask yourself this, why am I giving out all of this free information? Why am I giving you guys this free information? I'm giving you guys this free information to give you guys information, not only to help you in your individual lives. I'm actually wanting you to all be a little bit more proactive. I would be a liar if I didn't say that I wasn't giving this information to spark something in each and every one of you. The day-to-day taxpayer that I see, they go to their tax guy between the months of January, February, March, and April with their tax information and their paperwork. And they sit down and go over their information with their tax guy, submit everything. And then they try to ask their tax guy what they can do to lower their tax bill. And by that time, it's too late because you're in a tax preparation appointment, yet you're trying to do tax planning. That conversation should have happened in the previous year when you were making the financial decisions, because you could have made strategic moves in the tax code to help offset any of the income that you could be faced with that could be taxed on. I want to make sure that we are being proactive, which is why I'm offering you guys this coaching call at such a great discounted price, which is why I'm giving you my 24 wealth multipliers in the Trump tax code, and which is why I'm getting you the IRS deduction strategies that the IRS doesn't want you to know about. I'm giving you this information, and I'm going to sit down with you and apply all of it to your specific situation. What I do ask is that you sign up today, because I am no longer going to be offering this coaching call at the valued $100 price after 48 hours from this video being posted, which means that this opportunity is a once-in-a-lifetime opportunity, and I would like each and every individual who's watching this video to take advantage of it. I want you guys to take advantage of it because I want to spend time with you on leveraging the tax codes that are out there. What we're going to get out of this is a review of your past tax returns. I'm going to spend time diving into each of your past 3 years tax returns because the IRS allows me up to 3 years to go back and amend tax returns. So if I know I have 3 years to go back and amend tax returns, why am I going to start on my client's tax return in the tax year that they're in? That doesn't make sense to me. Let me put my eyes on their previous tax returns so I can learn how their tax liability got to where it is today. And I can also determine if there's any areas of opportunity that they missed out on in not leveraging the tax codes. I want to make sure that my clients have the chance to go back and get money left on the table if there's an opportunity to go back and get money left on the table. Not to mention, I want to go over the new opportunities that are out there underneath the new Trump tax codes. If you are getting into business, we have a lot to talk about, as these new tax codes are going to boost the amount of write-offs that you are going to be able to take and boost the amount of income you will be taking home by making the correct strategic moves. I want to make sure that we sit down and talk about what those moves need to look like for you and your business specifically. Also, during this 30-minute coaching call, you have the opportunity to ask me any and every question. Carlton, how can I write off a yacht? Carlton, how can me and my husband travel to and from Florida twice a year? I want those questions to come to me, and I want to show you how you can make it a possibility, how you can leverage the laws to make it a write-off, how you can act and follow the laws to appeal to your lifestyle. This is what this coaching call is for. Now, let's recap. I will be reviewing your past 3 years tax returns. We'll be discussing the new opportunities in the new Trump tax codes. I will be spending 30 minutes going over every tax question that you have, and I'll be giving you my bonus training on the tax deduction secrets the IRS does not want you to know, as well as my booklet on the 24 wealth multipliers in the Trump tax plan. All of this for yours for $100 by signing up for our coaching call. All I ask is that you guys make a decision today. Sign up for the coaching call. Take advantage of this opportunity that I'm offering you. because it's not going to stick around. What I want you guys to know is that if you're interested in being proactive, it is going to require us to slow down so that we can go faster than we ever thought we could. I just want to make sure that I can slow you down and get the right strategies implemented so that I can put you back on that racetrack and go as fast as you need to go towards the financial future that you have for yourselves. My name is Carlton Dennis, licensed tax strategist with Carla Dennis & Associates, and it's been a pleasure to speak with you guys today. Thank you.